All right, well, our next guest is not only a former lacrosse star, but also an investor with a stacked portfolio. Paul Rabil, the co-founder of Premier Lacrosse League, is back with us. And Paul, you've been pretty active in the markets over the summer. Did you get more active over the summer because of the pandemic? And what do you hold right now?
Yeah, well, I'm long on big tech, as we've all seen. Not only COVID act as an accelerator for all of us working at home, but you look at solid balance sheets, you look at cash on hand, minimal debt, and the ability to scale up and scale down quickly. And I know as a day trader today, you see a little fallback on tech and opportunity for some people to get in. But tech has a major play in my business as well, as it's enabled us to start the Premier Lacrosse League, and now they're purchasing media rights.
Right. What questions do you have for our panel tonight, Paul?
Well, I'll start with tech, and we look at Apple taking 20 some odd years to reach $1 trillion market cap valuation, and then they quickly get to above $2 trillion because they've bundled their services and now are getting a valuation on a multiple of revenue. How do you guys think about Apple right now?
That's a very good question, and one that a lot of people out there are asking. Karen, why don't you tackle that?
Yeah, well, I think there's a little, this $1 trillion thing is sort of was it Roger Bannister, was that his name, who broke the mile mark? And then after that nobody thought could be done. And then after that, everybody felt like, oh, it can be done. So you saw it broken again and again. Once that $1 trillion mark was, crashed, we saw a number of companies go through. I am long Apple. I am a little distressed at how the valuation has changed in terms of the multiple of earnings. I don't like that to be the driver of why a stock goes higher. I like it to be good earnings. They did have very, very good earnings, and I am optimistic about the 5G prospects for them, but I'm nervous about how relatively expensive it is. However, all that having been said, I do believe this market is somewhat rigged and that equity valuations are propped up higher, and so I don't have an alternative. I'm keeping my Apple.
All right. Paul, what's your next question?
All right, another feature of sports. We look at a previous caller asked about Lululemon. I like the back and forth there. In sports, you typically have your official outfitter as a Nike or an Adidas. Both companies are conserving cash and pulling back on their marketing spend as they jostle for 2022-2023 market share. How do you view the coming of the holidays and some of their direct-to-consumer strategies and that stock in particular?
Dan, what do you tell Paul?
Yeah, so in Nike in particular, it's interesting, this was one where you would have expected, for a lot of the reasons we said about Lulu, premium valuation, that, investors might have been a little bit hesitant here, but the stock's broken out and just keeps making new highs every day. So when you think about what does the holiday season look like, Nike is obviously trades usually into the Olympics, so we have that catalyst coming next year. We know that if the NFL's on, that's good promotion. We know that they've done an amazing job in the direct-to-consumer, and I think that's been a huge differentiator over the last few years. So I like Nike here, man. I'll tell you, this thing, it just broke out, I think, at 105, 106. Listen, I know that you can't even consider the fact that stocks go down, but let me tell you something. I've been doing this a long time. They do go down. You're going to have opportunities to buy them. Take a line and draw it where it broke out. That's where you add back into a name like Nike, in my opinion. That's near 105.
Paul, thanks for sticking around. Hope you got some answers.
Definitely. Thanks for having me.
All right, Paul Rabil.